I ultimately think that Bitcoin, the benchmark, is going to lead us a lot higher. And so we'll probably get an alt season in those memeable assets. The question is which assets and when. And the final thing I'll say on that topic is that the opportunity cost of holding the wrong token is very high right now.
This episode is brought to you by Kraken OTC. Get access to 24/7 trading services for high net worth individuals and institutional clients to execute orders over $50,000. You'll hear more about them later in the show. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Welcome back to another episode of the 1000X podcast. Today is a good one because we finally had a little bit of movement in the market. We were going sideways for a bit, sort of chopping around that 118, 120 zone. And then we scared the shit out of everybody by dumping hard over the weekend. And people are kind of freaking out on the timeline a little bit. It's not so bad this morning, this nice Monday morning, because we bounced back a little bit. But Jonah, are we supposed to be nervous right now?
Nah.
What's happening?
Nah, we're not supposed to be nervous. Come on, Permabull here speaking. I think, honestly, here's what I think. Mm-hmm. There is a lot of amateur hour going on crypto Twitter. It's kind of comical. I think that most people, myself included, not to be an elitist or anything, when they start trading, their only framework is green candles are bullish, red candles are bearish, right? And most people look at daily charts with daily candles. So you see a few red candles, you freak out and sell. You see a few green candles, you get greedy and buy. That's human nature. That's how everybody starts off as a trader. And I think this latest wave of buying that took us up to 118K, I think it attracted a new retail user base. A new wave of 17-year-old crypto gamblers were onboarded by this momentum, and they're learning how to trade for the first time. And so what we're seeing is sort of the fledgling price action of people who don't really know what they're doing. Also, people who have gotten into the mindset of DCAing steadily into crypto over the course of the last few years. Now we're on the highs. Everybody who's ever bought Bitcoin is in the money, and people don't really know what to do next. So, to your very wise words, Avi, we never really stabilized on all-time highs. We certainly didn't this time. We retraced back to 113K on data that's really not that meaningful to the long-term thesis. I think it was some payroll data, some Trump not chickening out stuff. We'll talk about all the macro reasons why we retraced shortly. But ultimately, what really matters to me is I think a lot of participants either bought fresh coin on the highs or added leverage to their existing position on the highs, which is a greedy thing to do. And this little flush down to 113K kind of, reset the clock a bit and cleaned out some unhealthy positioning. And there's the people who are, just to finish the thought, the people who are scared right now are scared for reasons that they'll have totally forgotten about if we're trading at 118K again. This is all temporary to me. What do you think?
I'm with you. I think what ended up happening is that the market itself got a little bit over its skis. There was a lot of exuberance. I mean, people were talking about how things like Solana, Sui going all the way down the risk curve. We're getting treasury companies. You were having altcoins sort of pumping across the board, and Bitcoin wasn't going anywhere. It was going sideways. And I think you just needed to flush out a little bit of the leverage and exuberance that was in the markets. If you go and you actually look at the open interest charts and you look at the funding rates, they came down a lot from where we were even just 5-6 days ago. And I mean, if you go to July 23rd through July 28th, you're seeing generally funding rates continuing to be above baseline, and you saw a build up in open interest despite no move in Bitcoin, and that tends to be a bad sign. If you're seeing people pile on leverage into something and it's not going up, maybe it's time for a little bit of a breather. But I think this is not a structural change in the market. everything that we've talked about for the last 3 months, 4 months is still there and still looking good. And we're seeing that now with the bounces coming off the lows. ETH is up 5% today, and it's almost back at the highs. I mean, it basically retraced 70% of the move already. Bitcoin's lagging behind a little bit, but altcoins are also bouncing back nicely. I mean, I personally just think that we're gonna get these tiny little shakeouts, and that's okay. The equity markets also can't be understated that they were a part of that. You saw rattling over tariffs, which sent down the S&P 3.5% from the highs, and now Nasdaq's up 1.5% and S&P's up 1.3%. This just happens sometimes, and this is not a time to get worried. I think we're still on track for my broader idea of we get a crazy move into the end of the year post summer. I think August can be a bit slow. Like, I wouldn't take out any major crazy trades in August, but September, October, November, I think we're going to see some pretty crazy action in the markets.
Yeah, it's actually common across all markets to have a very quiet August. Participants are out in Long Island, on the beach, eating lobster rolls. They're not necessarily at the desk trying to make their year from September through December. So basically, I think it's an old adage that you're supposed to expect slow price action and gap year moves in August. But just zooming out more broadly, I totally agree with your point. Bull markets tend to get volatile as you hit the 7th or 8th inning time wise, and in crypto, the 8th inning of time in the bull market is like probably the 2nd inning of price, because most of these big parabolic moves occur at the very end. So it would be a shame to freak out and sell all your stack because Bitcoin went down $5,000 a token off of all-time highs, and the red candles made you bearish, but you had no other rationale for selling, and then it just pumped straight to 140 to 180k. That would be something to kick yourself over. So I'm not personally doing that. I don't see any reasons to get long-term bearish, at least until the midterms, which is another year plus. So I mean, one other feature that we should talk about, actually, shameless plug here, the 1000x agent alerted me to the fact I hadn't really been watching the ETF flows, but our bot posted about it on Twitter. Apparently, $1 billion worth of outflows between over the course of last Thursday and Friday. Do you think that's retail just exiting Bitcoin in frustration, or do you think that it's an unwind of a basis trade? Because as you said, funding rates have come off. You're on mute.
Combination. I think it's a combination. It's one of those things where the ETF tracks Bitcoin price now, and that's kind of just what it does, or what I'll say is it drives Bitcoin price. When you see $812 million of outflows and you see that the Bitcoin chart went down, I think it's very reasonable to assume that people holding the ETF chucked out some Bitcoin, right? And that's why the numbers used to be, in my opinion, a better predictor of future price action of Bitcoin, but they're not amazing. It's not really that useful today, because it just kind of tells you what that day's price action is. And the reason is because there was a growth rate to the Bitcoin ETF. There was new capital that was coming in that was completely under allocated to Bitcoin, and it was shifting over into this structure. And so every day there was going to be more and more of this sticky capital that was added to the ETF. I think that rate of sticky capital being added to the ETF has slowed dramatically. And now a lot of the ETF capital that you see coming in and coming out is traded capital. And so that's gonna, you see what I'm saying? It's mostly the inflows and outflows, instead of being just net additions, are most likely just trading now.
Yeah.
In the vast, so it doesn't really mean anything, right? Like, if 812 million come out, that 812 million probably came from people that are actively trading this ETF and will buy back in when either it gets back to where they sold and they phone win, or it goes down to where they expected to rebuy it, right? This is mostly trading capital now.
Handling large digital asset trades requires precision. Kraken OTC gives high net worth individuals and institutions access to deep liquidity and competitive execution for crypto orders over $50,000 with minimal market impact and around-the-clock support. Trade via chat or RFQ at kraken.com/blockworks. Shout out to today's sponsor, Katana. Katana is a DeFi-first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Yeah, that makes sense. I kind of didn't know what to think about it because the ETF, it used to lead Bitcoin. Now it's either like it kind of just reflects what's already going on, or it lags as a result of it being active capital trading basis. And basis is, when Bitcoin rallies, then basis goes up, then arbitrageurs buy the ETF to sell futures to capture the basis. So it's kind of like a knock-on lagging effect. So yeah, it seems like less of a signal. But just moving over to ETH for a second, a lot of people have been looking at the ETH inflows, which I don't have in front of me right this second. So I'm an idiot, but there have been some substantial ETH inflows into those ETFs and an institutional narrative. One thing that I've noticed that I wanted to chat with you about is that the ETH BTC chart looks a lot like the BTC chart. Like, is ETH?
What are you talking about, Jonah?
Like, if you overlay the two, right? Today we've got a big green candle on ETH BTC, and we've also got a green candle on Bitcoin. So basically, what I'm asking is ETH just levered Bitcoin right now? The answer is probably no. But to me, like if ETH BTC goes up when BTC goes up, it's just lever, and goes down when BTC goes down. ETH is just trading like a high beta Bitcoin.
I think that's fair, but it's what's interesting about when you say beta is, well, let's isolate that, right?
Yeah.
I think that there is an alpha component here, and the reason that there's an alpha component is because of these treasury companies that are buying up a ton of ETH. There is a world in which Bitcoin goes sideways to slightly down that ETH dramatically outperforms. Like, if Bitcoin stays between 112 and 118 for the next month, it's very possible that ETH can put in 15 to 20%, even if Bitcoin's down 2%. So in that case, I wouldn't necessarily call it beta, right?
Yeah,
obviously, I think if Bitcoin goes up, ETH is going to go up more. And if Bitcoin goes down a lot, I think ETH is going to go down a lot more. But there's also a middle zone where I think ETH does well. And it does well specifically because there are a lot of treasury companies coming online for ETH, and they're not that big yet. And they will get big, and they will get structurally important, and they will blow up at some point. I'm saying it now, but ETH is in a good spot when it comes to flows and technicals. And this is what I took a beating publicly on the last podcast, because people were like, well, haven't you been bearish ETH for a really fucking long time? And my answer is like, still yes, but I admitted it. Like, I admitted that last time on the podcast when I was talking about how good ETH looked from a technical perspective, I missed it. I think ETH is probably, like, in hindsight, looked good from a technical perspective for a while. And I kind of was too stuck in the fundamental analysis zone that I think we've both been harping on for a while. What's happening now is purely flow driven. It's purely the fact that people see ETH as a secondary catch-up trade, and it has a lot of these exogenous treasury companies coming in and buying it, right? What's actually hilarious to me is that I got pinged a lot recently about these massive shorts on ETH. Have you seen that CME chart?
No.
Of the CME shorts on ETH?
If you could share it, that'd be great. But if you don't have it, no worries.
Yeah, it's phenomenal. Hold on, CME Ether short interest. Basically, it's insane. There's a lot of short interest on the CME when it comes to ETH, and I think people looked at that and they goes, well, it's time to squeeze the shit out of people, right?
Yeah, I mean, no, go ahead. Sorry.
And it's kind of like the reason that it's funny to me, Jonah, personally, is because I know that the vast majority of these guys are delta neutral. They're capturing it's a basis trade, but crypto's a meme, man. Like let's not over intellectualize it. Sometimes, like there are moments where it just acts purely as a meme, and if enough people are looking at that and going, well, short interest and treasury companies are buying, time to buy this, and ETH continues to be strong off the lows. I think one thing that ETH has always struggled with is being strong off the lows. Not always, but I mean, over the last like 3 years when ETH BTC has been going down in a straight line, and now ETH is bouncing pretty aggressively. It just shows you there's latent interest. And so to be honest, like I don't own any ETH right now, but I probably should reallocate a little bit for the trade.
I was literally like, while you were talking about that, you're getting me bullish on ETH, and I'm thinking of just saying, I was messing around on Kraken, just thinking like, hey, how much? I don't want to have to sell Bitcoin and realize a tax gain to buy ETH when it feels like ETH is just for a trade anyway. Maybe the right way to do it is just to buy some ETH on leverage against the rest of the portfolio, because we did retrace just a little bit. Just get a little bit levered long ETH with Bitcoin as collateral, the Bitcoin that I have on exchange. It feels like it is time to get long ETH for a trade. And you mentioned that if we go way up or way down, ETH is going to trade as beta to Bitcoin. Just maybe it moves 10% for every 5% in Bitcoin, but within this sort of more reasonable band, it just steadily outperforms. And we're kind of seeing that play out on the charts, over not over like a 6-month time span, but over a 1-month time span. ETH BTC is technically solid, as you said. So maybe it is time to just, if you want to buy the dip, just use some of your existing bags as collateral against a leveraged position, buying a little more ETH. I think that might be a good trade. I kind of want to do it, even though I feel disgusting being long ETH. Because it's such a mega cap asset. It's not like a 10 bagger or even a 5 bagger is just not on the table, right?
I mean, it's just a trade. You're taking advantage of what I personally view as irrational exuberance in this market, and you're saying, okay, well,
and shorts.
The market, I mean, so I was on a podcast with our favorite guy, Santi, a little bit ago, and Santi made a very good point. He actually made a very good point. And what he said was, this is an institutional cycle. I think this was very astute. This is an institutional cycle. And so what assets appeal the most to institutions? This is not a crypto native cycle. The crypto natives are not winning this cycle by any stretch of the imagination. Like the memes are getting clobbered left and right. The only winner has been Bitcoin and then these public companies, big winners. ETH is the second most institutional asset, for better or for worse. It is. Just because it's the second oldest useful thing that exists. And what's the third is Ripple. And so what you have to understand is where is the money coming from and what are they going to buy, right? And if we agree, and I'm saying you might not agree, but if you agree that this is an institutional cycle and they're buying quote unquote institutional assets, then you probably want to own a portfolio of Bitcoin, Ethereum, and Ripple until those flows subside. What do you think of that?
It's hilarious. While you were talking, I just YOLO'd some ETH on leverage. I buy it.
Jonah, where do you trade, by the way?
I do. My favorite liquid exchange is Kraken Pro. Just now that I live in the US, I like this. By the way, Kraken has not paid me to say this. they do sponsor our pod, but I've tried a few independently. I like Kraken because you have ladders for stable coins that are sort of independent from each other. It's not like beginner mode shit where you have just one USD agglomerated line item like you do on Coinbase. You can trade USDT, USDC. You can trade Tether versus dollars.
Why does that matter to you?
Because sometimes I just like having, maybe it's like an artifact of my time on the OTC desk at Cumberland. I don't like having the exchange manage risk for me. It just feels more organic to have all of the assets listed as what they are. It feels more professional. It treats the user with more respect than just to say you shouldn't care whether you own Tether or USDC or whether it came in on Solana or Base or whether it's CB, BTC or BTC. Like it's Bitcoin or it's dollars. I like, especially from the depeggings that occurred in 2021. I feel like my risk management, like part of my lizard brain isn't flashing warning signs when I can see what assets I actually have on there as opposed to not. And then the other thing that I like about it is that it's never gated my assets. Like Coinbase, you dump 300 grand on there, be like, you can withdraw $8,000 until your KYC has been reapproved in 14 days. That was a deal breaker for me. So I switched to Kraken. Coinbase is unavoidable because if you're doing anything on Base, which we are, you kind of, it's a better bridge than most of the I don't know why these bridging sites that people set up are so sketchy looking. Like crypto has a naming problem where crypto founders can't just name something like Citadel or Bridgewater. It's always like fartbridge.xyz or pissantbridge LLC.info. Somehow it just doesn't feel good bridging lots of assets from Base to the mainnet using one of the random bridging protocols. I prefer to just bridge on Coinbase and deal with their gating problem. Anyway, I use Kraken for most of it. When I lived offshore, I used Binance, but now I live in the United States, so I feel like Kraken's the a legitimate U.S. exchange. Anyway, that was all a tangent. I think
I think that's fair because I haven't actually done an exchange review in a while. I also use Kraken, but that's mainly because I just hate the Coinbase interface.
Me too.
I literally just can't stand it. I've been looking for a place. I've been like, okay, I haven't actually gone and done a survey of exchanges in a while. I probably should.
I like Kraken. I guess there are bigger exchanges like Binance and Bybit that are offshore. I know Binance's UI really well. I don't.
I also unfortunately know Binance's UI very well.
Yeah,
I do not have access to it.
It's just
Is
off
Binance
the table.
US going to come back?
I don't know. And even if it does, it feels tainted. I wouldn't want to.
I think it is back.
To me, there are two US exchanges, and Kraken is the only one that doesn't disrespect your intelligence every time you log on. So that's why I use it. It's a good UX. It feels like Hyperliquid copied Kraken. It's all not that I would ever use Hyperliquid as a US user, but when I've just looked at the read-only version, the sliders, the interaction, the different tabs, it's all very, very similar to Kraken. Whereas Binance is kind of a different. It's more for the Asian brain, not for the American brain. Anyway, back to your point.
There was actually a time way back in the day where. I think you can still switch the settings, or maybe it's like auto set when you're in Asia, but where Binance had red when things were going up and green when things were going down. Because in Asia, red is good.
Red is lucky.
Yeah, red is lucky.
So Chinese.
So, I remember those days.
It's funny. Like Asia is just another planet. If we have any Asian listeners, respect to you guys. For example, our housekeeper here is from Bhutan, and I got back from a month in France, and she was looking at me, and she was like, "Wow, you gained weight. You got really fat." but not in a like a disparaging way, like in a congratulations, like well done. It must have been a great vacation. I was just like, man, it's like red up is red, down is green. What is wrong with me? At first, I was like, huh? And then I realized it was a compliment. So anyway,
Wait, but isn't Bhutan supposed to be like a ridiculously happy place? Like, aren't they always like on the top of the list?
It's gorgeous
of all
country.
The happiest places on earth.
It's a gorgeous country. Happiness is what they brand themselves as. When they like in Paro in the main intersection, they don't have a street light. They just have a guy in a full police outfit and like 110 degree, 100% humidity, like Southeast Asian heat with white gloves,
Perfect.
like directing traffic around. It's kind of a police state. Then you go hike up into the mountains and it's just a bunch of monks and goats and spicy food and incredible temples. It's one of the most beautiful countries I've ever been to. Their king, he's like the 5th generation king. They call him K5. He has his own whiskey. It's called K5. Highly recommend it.
Really?
Delicious. Yeah. It's another planet. If I lived there, I'd trade on Bybit, but I live in Los Angeles, so I trade on Kraken. Yeah. Anyway,
fair enough. I do miss Bybit. I mean, the thing that I really hope comes, which is going to catalyze, by the way, probably a whole nother type of run, perhaps among altcoins, is when you get U.S. access to all sorts of perpetual swaps and leverage. Let's see.
Yeah.
Cross your fingers, Jonah. That
dollar sign hype is tripling when that happens. That is your big catalyst for the Hyperliquid. Oh man. But
speaking of Hyperliquid, is Hyperliquid over? People don't really care about it anymore. What's going on?
People have moved on to Galaxy and other memes because Hyperliquid, because there have been a few red candles. Everybody's just forgotten why they're long Hyperliquid. The nice thing about Hyperliquid is that when people trade on Hyperliquid, which presumably they're still doing, tokens get bought and burned or locked away in some vault. So, you don't need the timeline to be jizzing itself with orgasmic excitement for Hyperliquid for the token to go up. You need the exchange to survive, and it obviously will, given the conversation that we just had. Like, there's not a lot of choices for people out there, especially in the no KYC space. So, it's, to me, like Hyperliquid is this magical combination of incredible exchange, incredible user experience. It's kind of like a mixer almost for people who don't pass the KYC test for, let's assume, legitimate reasons. Maybe they don't have a driver's license or a passport. They're just, unbanked. Anyway, it's a great product. It'll keep buying tokens. It's not institutional though at all. It will become institutional. Like Hyperliquid will become institutional when perps are made legal in the United States, and then everybody will just connect to it, and it'll probably become some sort of liquid backend for finance in ways that centralized exchanges can't, because they don't have open architecture. But my one concern for Hyperliquid is that access to the US market and legalized perps may also come with KYC requirements, which could nuke a lot of its, maybe it'll just be in the US. I don't know. What do you think?
Handling large digital asset trades requires precision. Kraken OTC gives high net worth individuals and institutions access to deep liquidity and competitive execution for crypto orders over $50,000 with minimal market impact and around-the-clock support. Trade via chat or RFQ at kraken.com/blockworks. Shout out to today's sponsor, Katana. Katana is a DeFi-first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion cat campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Yeah, no, I think that the market has just moved on from things that make sense, and we're now punting things that are fun and memey.
Yeah.
AKA, I mean, if you look at the market right now, what is like really pulling the 5-10x's, like I said, are these treasury companies, but you're also getting Galaxy pulling 10% moves. Now, what I will say is that Galaxy does have value associated with it, but I feel like people are trading it like a meme stock. Like
Yeah.
the way that people are touching it, or they're trading it like a meme stock. It's gotten a lot of interest. It's kind of whipping around. People are calling for 5 to 10x's on it, basically because of a data center that they bought that is now transitioning to AI, which is a great purchase by them. Well done, Galaxy, and that's going to confer a lot of value. And they've got a good core crypto business. But yeah, I mean, I feel like people are punting around crypto stocks like meme stocks now. And I mean, another great example of this is just look at the Coinbase move, right? This is clearly not a fundamental trade. On Wednesday, June 18th, we're trading at $254. 1 month later, we're up 72%. On July 18th, you're up 72%. That's the top. And you're down 30% 3 weeks later. Like, this has nothing to do with crypto volumes or how much money Coinbase is making or any of that. That move is pure people aping in because crypto is hot, and then aping out because there was a red candle. Like, this is just, this is kind of a trading paradise right now if you're looking in the right places.
If you're fading moves.
Like Circle too. I mean, Circle, come on. Did we not call the exact top on Circle? Did we not say it's over for the Circle fanboys? I personally also think it's over for the Coin fanboys. I'll buy some puts on that. I own some puts on Coinbase. I have for I think I bought them. I bought them Friday morning.
Good to see that you're still active, Avi.
Yeah.
You gave a speech a couple weeks ago about how you were scaling back and getting more investory and, Warren Buffett-ish, but it's good to see that you have the disease still, and you're like,
I mean, I'm still a deeply diseased and sick human, which means that I need to trade in order to feel alive. I just don't feel the need to do it like 8 hours a day to 12 hours a day, sitting in front of my desk, trying to find every single, I guess it was more of a mental switch in my head where I told myself, hey man, you don't need to capture every single trade that you could have possibly seen and understood. You can actually miss a bunch of trades and still end up making a lot of money in life. Yeah, that was like the greatest mental shift for me. And it's a super privileged mental shift because obviously we've made a boatload of money, both of us trading. And so we can take that approach, which is why, spending more time on actually building things right now, like the 1000x terminal, which if you're listening to this and you want to give feedback, please go on, because it is actually pretty freaking good right now. And we need feedback. But yeah, I mean, basically the way that I think about it now is that you take small swings where you think you have a little bit of edge, and then you take big swings where you have a lot of edge, and you just continuously push the bar of what is edge a little bit higher.
Yeah.
Over time. Like as you get more money, you just kind of push that bar a little bit higher, in my personal opinion. And obviously you take out flyers here and there. Like one flyer, for example, is TON. I took out a flyer. I took out a flyer on TON because I thought that it's like almost unfathomable to me that they wouldn't try to do a treasury company for TON. I think at some point it's going to happen, and it's like the Telegram is a good investment. And so if you're going to access the public, if you're going to if I sit back and I sit here and I go, what asset? Is there any crypto asset that I could sell to public institutions on the public market? That's kind of it. So I did take out a little flyer on that one.
That's a good one.
But yeah, I mean,
I guess just speaking about institutional assets. So a couple of things, a lot to unpack there. Mm-hmm. First thing you said about still trading, but just not trying to capture every trade, I think is very relevant, because most people don't have 8 hours a day to just try and scrape every penny out of the crypto market. And even if they did, the people who try just can't more often than not. Maybe you could, but even me, I struggled with that. So I think it's fine to like, you have to get comfortable with the idea of just missing most trades, miss the small margin trades and swing on the big margin trades where there's a lot of juice. Like, I think there's a lot of juice in maybe, I agree with you. I think ETH could pop 30% in the next month while fuck all is going on in the rest of the market, just from treasury companies lifting it. And you see it in the ETF flows. Anyway, so there's that. The second thing is you talk about institutional assets. So you mentioned a few. You mentioned Coinbase, ETH, XRP, Galaxy, and let's throw in a couple others like Kraken could go public, Bullish could go public. I think we need to distinguish between institutional crypto and crypto that institutions will buy. So what I mean by that is institutional crypto is everything on the list that I just mentioned. Like Galaxy is crypto XAI. Galaxy is an institution. Coinbase is institutional crypto. Like it's the OG institutional crypto. Kraken will be institutional crypto when it's tradable in public. Ultimately, just because something is institutional crypto does not mean that the institutions will buy that asset. In fact, like the biggest bear case for Galaxy right now is that, Jefferies and Goldman Sachs just initiated coverage on them. That's about as institutional as it gets. I'm sure that their ratings will be good. Jefferies, I think, initiated it or will initiate it positively. Goldman, who knows? But, let's say that these institutions just take a look at the financials, take a look under the hood in a way that retail won't, and says like, these assets aren't actually that valuable. Galaxy's, priced to perfection. Maybe it'll go down. We initiate a bearish rating. Not saying that'll happen or that it has, because it certainly hasn't, but like that is a risk, right? And then maybe you won't get tremendous institutional inflows. The bull case for institutional crypto tickers like Galaxy and Coinbase is that the Wall Street Bets Reddit crowd just decides to send it 10x because they can. And I think of all of the different crypto tickers, crypto institutional tickers, XRP, Galaxy, all of the ones you mentioned, I think Galaxy has the most potential to be one of these random meme stocks like Krispy Kreme or GameStop that just sends for absolutely no reason.
Well, I mean, it's first of all, it's got a great name. I mean, send it to the freaking Galaxy is phenomenal. Like, it's like great meme bait. Yeah, they've got a charismatic leader in Mike Novogratz, who also I think is good. He's like a good memeable figure to get out there, and he's obviously very public. He's on CNBC like every other day. So they've got like two boxes checked. Third box checked is crypto and AI. Like that's pretty solid. The only thing is that we don't know is are they actually going to deliver? Does it matter? Maybe not. But
it matters to the institutional money.
If they really mess up, they're going to get a lot of people shorting them. Yeah. And a lot of people are gonna come in and try to hammer them. But with that being said, it does seem like and okay, there's another fourth box actually that I just thought of, is that there are people out there that are making the fundamental case for it. Like even with GameStop, yes, it was a meme stock, but Roaring Kitty came out and tried his best to make a fundamental case for GameStop. That was actually very important. To turning GameStop into a meme. And this guy Duncan, who's actually very intelligent guy, and a good writer. I highly suggest you read his stuff. He's been writing a lot about how Galaxy does have the potential to really make a lot of money, and might actually be undervalued. So it's kind of got a lot of things going for it.
Yeah, binary outcomes. Galaxy earnings coming up soon. I think the market will be focused on it. If they're good, I think you're going to see a lack of detailed analysis and just relentless bull posting. And the thing maybe goes to $40 a share, up from $29 where it's trading currently as of this recording. Or it could trade down, $5-6, and then it's probably a buy. Like I think Galaxy, you want to look, I think you may actually have alpha if you're on Twitter all day or Reddit following this stuff, because that's the community that's going to determine price action. Meanwhile, like assets like ETH or XRP, you have to look at institutional inflows. I don't think that the I don't think that the online degen community is going to move the needle for Ether XRP anymore. I think that whoever in that community believes in those assets is already 10 out of 10 max long. And as we just saw from XRP price action, I mean, you can get wrecked on this stuff. This thing went, if you bought $3.60 a token, it traded down to 272. Like you could lose 35% in a bull market like that on one of these tokens. So you have to be careful for XRP and for ETH. You have to look for signs of institutions buying in. And XRP, I think it's a scam. I've always thought it's a scam. It's a company that sells a token with no value. Like what their kind of their sales pitch for XRP, the token, is that it's needed as a bridge token to bridge between fiat currencies and facilitate cross-border banking. But that's obviously nonsense. You don't need a volatile, floating, illiquid token to be a bridge currency between dollars and euros. You can just swap dollars for euros and that works just fine. So Ripple, the company, is a total scam, but it's one of those scams like whatever the one Bill Ackman tried to short.
I want to stop you there.
Yeah.
I will say, this is important, is that it may have started as a scam, but you can fake it till you make it. And Ripple has managed to accumulate a massive war chest with a lot of money. And when you have billions of dollars on your balance sheet, what do? You start buying things, and they bought Hidden Road, which is a
legitimate
brokerage
company.
They're attempting to buy legitimate companies to make themselves a legitimate player. And so while I think that they probably don't care that much about their token, they do care a lot about the equity in the company, the Ripple Labs company. And I think that they're going to figure out something to do with it because I think they do want to go public.
They're kind of like a treasury company.
They're almost definitely going to go public. And yeah, they're probably going to go public in the, and act as a treasury company would act. And that might be a good trade. And as you know, this market has now turned into a meme market. Our fundamental thesis be damned. It will come back, and I think the ones that the projects that make money will win over the next 2 years. But the projects that are winning right now are the ones that have the most attention on them from the institutional side. And if Ripple goes public, Ripple Labs goes public, Ripple Coin is going to the freaking moon.
Yeah, no, that's true. Okay, so there's a trade there.
Mm-hmm.
And I guess, that kind of brings us full circle. Maybe what these companies should do, like just random kind of dinosaur coins, like let's take Near, for example. Or Near, I think, according to my sketchy online research that I did in the last 10 seconds, Near has about $1 billion sitting in their treasury. Maybe their protocol is passé and useless or just hasn't been adopted. But that $1 billion could buy something valuable. Maybe you buy like a medium-sized tequila company for that. Maybe you buy a company that produces widgets and that people use in everyday life. Like maybe what happens is the phenomenon that we've witnessed with the treasury companies, where some pharmaceutical company with a pill that didn't get approved just gets like reverse SPAC'd into a crypto ETH buying vehicle. Maybe we'll see something similar happen in the opposite direction, where companies whose tokens are useless but valuable, like XRP or Near or what Polkadot, maybe they should start going and buying actual businesses and using the money to become legitimate companies, just like Ripple did with Hidden Road, and assemble some sort of portfolio in a way that no one would have ever expected. And so I think what we're seeing here is kind of like a trading opportunity ripe environment where I think TradFi just doesn't get it. And so maybe there will be some entrepreneurial, enterprising 1000X listeners that identify these sorts of opportunities and maybe pick up a few scraps that become worth, their weight in gold. It's complex, this landscape. And I ultimately think that Bitcoin, the benchmark, is going to lead us a lot higher. And so we'll probably get an alt season in those memeable assets. The question is which assets and when. And the final thing I'll say on that topic is that the opportunity cost of holding the wrong token is very high right now. Because if you sit in, let's say that you sit in XRP because you like it and it's on the timeline, and you lose 35% on your investment instead of just holding Bitcoin, which is up 5% over the same time period, you have absolutely immolated, not just value on your XRP losses, but opportunity cost on the Bitcoin you could have owned. So like treacherous times, maybe not a good time for active trading, maybe a good time to just sort of like winnow down, come up with your top 10 bets and invest in the top 2.
I think that there are a lot of trading opportunities that happen right now. Like I wouldn't say that like this is the time to take your eye off the ball in terms of trading opportunities. They do exist. I mean, I just brought up two, for example, like if you're super bullish on the institutionalization and like the fact that this is the quote unquote institutional cycle, and you want to figure out what the institutions are going to buy, like maybe you want to buy some TON, or you want to buy some Ripple as a trade. I mean, I would guess that September is going to be a big month for like definitely not August, but September is going to be a big month for this stuff. So maybe you want to start chipping in now and then go harder a little bit closer to September. Like when Ripple probably announces, I mean, I don't have any information on this. I wish I did. I don't, but I would assume that Ripple announces their IPO by the end of the year. And that would be a pretty big boon for Ripple. But I do agree, like the general, like if you go look at my list, what's actually trading well, there are some things. I mean, like for example, Litecoin is trading very well. Litecoin went up 20% off of the weekend lows. That's pretty freaking strong. And that chart looks good, I think, because people realize that Litecoin could also be rolled up into a treasury vehicle pretty easily, and that Litecoin is like the silver to the Bitcoin gold. And it's like what was interesting to all of the TradFi bros in 2017, like all of this simple stuff that was interesting to them could very much so work right now.
I was going to say, this sounds a lot like 2014 when people were talking about ETH. People were like, oh, dude, there's also another really cool one called XRP and Litecoin. Like it feels like it's 3 cycles ago right now. Macro wise, the setup is a lot more constructive though. And fundamentally, just because, all of the different regulatory green lights that are flashing in Washington, D.C. are here. That wasn't the case back then. We're about to be full swing into a rate cut cycle pretty soon with Trump. Like I think Trump firing the Bureau of Labor Statistics lady, is a sign of him taking.
What happened there? The world of Twitter was blowing up over it. Liberals very unhappy, conservatives happy, just based on party lines, and nobody actually understanding what just happened there. So, in your words, what happened there?
Some jobs. The jobs report came out. Trump didn't like it. The liberal story is like, oh, Trump didn't like the data, so he fired the person who reported the data. It's just like what Hitler did. And then the conservative approach is like, well, it's it was a partisan report. The data was skewed. The methodology was flawed. So they fired the partisan person who put it all together, or who's responsible for putting it all together. Heads should roll. The truth is probably somewhere in the middle. Maybe a little bit of methodology skew, probably inappropriate to fire the person, but that we live in an online polarized world. So that's what happened. But basically what it signals to me is that Trump is taking a more active role in things where presidents have traditionally, basically like functions of government where presidents have traditionally stayed away. And so I think that takes us one step closer to the appointment of Fed governors who are dovish because they're dovish, not because they're qualified, and maybe intervention at the Fed. So I think massive set of green lights in Washington for crypto, Genius Act, all the other random, clarity, all this other stuff, executive orders, David Sachs, blah, blah, blah. Then there's the other side of it, more interventionist, executive branch. We're heading into a rate cut cycle that's bullish for crypto. getting bearish here because of a few red candles seems so stupid. So like just watching this macro setup, the only thing, like you said last week, that could really send this thing into the toilet is, I think, a wild card out of Ukraine, like Putin drops a tactical nuke or something. Then we're in question mark territory.
You saw the tweet by Medvedev recently.
Which one?
The
nuclear thing?
The back and forth, the back and forth between Trump and Medvedev was, but Medvedev has no real power.
Yeah.
So I don't know. Anyway, I'm going to cross my fingers for no nuclear war. I do unfortunately have to end this podcast, but this has been an absolute pleasure, Jonah.
As
really
always, Avi.
Talking to you.
I even YOLO'd some ETH on leverage in the middle of our chat. This is
right.
I always learn something here. Thank you for making
stuff.
time. Good talking to you.
We'll talk soon.
Later. Nothing said on the 1000X podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.